Hello everyone, and welcome back to TradeSmart. As you know, I usually test strategies on the 5 and the 15-minute time frame, but today I brought you a very simple strategy which is used for the higher time frames, ideal for those who can spend hours per day watching the charts. These strategies are not made for the short-term big gains, but they are usually more reliable and they only require a few minutes per day to trade. This strategy is very similar to one of TradePro's strategy. I will leave a link to that video in the description. First, I will show you the indicators and the rules for the strategy. Then I will backtest it 100 times. After that, I will show you the results, the equity curve and a few optimization tips which you can implement to improve the results. And finally, I will also talk about how these strategies can be much more profitable within the same time period. With that said, let's get right into it. As I mentioned earlier, this strategy is very simple and it will only need 3 different indicators. So, let's see what are those indicators. So first, you will need the 200 exponential moving average. So type in exponential, and it's going to be this one. After that, you will need the no-nonsense Forex ATR indicator, which is going to be an indicator for our stop loss and take profit placements. So type in NNFX ATR, and it's going to be this one. And the third and the last one is going to be the Wecome, this one. Now let me show you the settings. For the EMA, you only need to set the length to 200, and I changed the style to yellow. For the NNFX ATR, you will have the 14 period, the take profit placement is going to be a 3 times ATR, and the stop loss is going to be a 1.5 ATR. Smoothing is going to be RMA. The style is going to be looking like this. And the last one is the Wecome indicator. I only just untick the boxes which we don't need. So basically I just left the wave trend and that's it. And now, let's see the rules for a long entry. For a long entry, you only need 2 criteria to be met. The first one is that you need to have the price above the 200 EMA, and the second one is that you need to get a green dot on the Wecome below the 0 line. So what I mean by that? As you can see, this line is going to be the 0 line, and these are our green dots. So we only can take a long position if the price is above the 200 EMA and we get a green dot just like this one. So, as you can see, price just broke above the 200 EMA, and now we just take a look down on the Wecome indicator and see where we get that green dot under the 0 line. As you can see, it's going to be here on this candle, so that is going to be a valid long entry. You are going to place your stop loss to the NNFX ATR indicator, and you are going to place your take profit to the NNFX ATR indicator. We are using a 1:2 risk-reward ratio. As you can see, this one was a winner. For a short entry, you need to have the price under the 200 EMA, and you need to get a red dot on the Wecome above the 0 line. So, as you can see, the price is trading under the 200 EMA, and you can see the red dots above the 0 line. Here, 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 and here. Now these are all positions we can take. So, let's see. If we take a short position right here, we set our stop loss to the NNFX ATR indicator and our take profit to the NNFX ATR indicator, which will give us a 1:2 risk-reward ratio again. As you can see, this one was a winner. If we take a look at the next example, here you can see we get another red dot above the 0 line, and the price is still under the 200 EMA. So, this is another short example. Stop loss placement is going to be the NNFX ATR, and the take profit placement is also going to be that. As you can see, this one just barely missed our take profit, so it's going to be a loser. And with that said, let's see the 100 trades. And the results are in. If you find value in my videos, don't forget to drop a like, subscribe if you haven't already, and turn on the notification bell so you won't miss any of my upcoming backtesting videos. After 100 trades on the Euro-USD pair, trading on the daily time frame with a 1:2 risk-reward ratio, we had 40 winners and 60 losses. The gain on the account risking 1% per trade is 20%, but if you risk more percent per trade, the gain on the account can go up significantly. Time took to complete the 100 trades was 10 years and 2 months, which sounds a lot, but remember, if you trade 10 different pairs, you can get 10 times more trading opportunities and potentially bigger gain on the account. The reason I showcase these swing trading strategies is because as you go on higher and higher time frames, the moves of the price become more predictable. At least that's what I experienced. So if you have around 10 different strategies for the daily time frame and you trade 10 different pairs, you will get much more trade opportunities on a more predictable time frame, and the small gain on the accounts will add up. And now, let's see the equity curve. As you can see, at the beginning we had a moderate losing streak, but then the account balance quickly recovered and moved higher in nice waves. This is not the prettiest equity curve I've seen, but it seems promising. To eliminate the losers, you need to add some filters for the trades. I will show you a few optimization tips which you can try out to make the strategy better. I also tried out myself a few of them and it gave me better results. Before I show you the optimization tips, comment down below what strategy should I test next, or if you have any video recommendations you would like to see on this channel, feel free to share it with me down in the comment section. And now, let's see the optimization tips. First, you can try out different risk-reward ratios and different stop-loss ATR values. You can set up all those at the no-nonsense Forex ATR indicator, which is going to be here. So let's say you can try out 1.5 with a 1.5 stop-loss. That's going to be a 1:1 risk-reward ratio. Or you can try out a 3 to a 6, for example. That is going to be a 1:2 risk-reward ratio, but it gives more breathing room to the price to move. Second one, you can limit how low the wave trend indicator has to go for you to take the green dot entry. Generally, in case of a long entry, the lower you get the green dot, the more likely that the price will make a significant move in your favor. So feel free to test different levels as filters for the green dot entry. As you can see, I already drew up a level at around the 50 line. And I will draw a line here at the 50 line too. So with this filter you can only take a short position if the red dot prints above this 50 line, or you can only take a long position if the green dot prints under this -50 line. So moving on, another thing which you can try is that after you enter the long and you are preparing for a next long position, wait till the wave trend crosses the 0 line before taking the next trade. As you can see, here's a green dot. Let's say we took that entry, but the wave trend didn't reach the 0 line, so we would have not taken this one. What I mean by that is, let's say you get a green dot right here, and the price is above the 200 EMA, that would have been an entry right there. And now you can take the next long entry until the wave trend crosses the 0 line, and then crosses back under to print the next green dot. So as you can see here, you take this entry and then you can take this one. But here, you get a green dot, you enter along, and the wave trend did not cross back to the 0 line, so you can take this entry. The logic behind this optimization is that price usually moves in waves. So it goes down, then it goes up, and then it goes down again. So if you get two trade signals in the same direction, most of the time the price hasn't moved enough to the opposite direction, so it's less likely to get a big move in your desired direction the second time. And third, as you might have seen in TradePro's videos, he uses a stochastic RSI as trade filter for this strategy. I would recommend setting up an oversold and an overbought level on the stochastic RSI. Let's say you can only enter along if the green dot prints while one of the stochastic RSI's line is below the 10, and you can only enter a short position if the red dot prints while one of the stochastic RSI's line is above the 90. Now let me show you what I mean by that. So as you can see, here is the stochastic RSI. Let's place two lines, one to the 90, and let's place one to the 10. So let's look for a long entry. As you can see, here we get a nice green dot, and the price is above the 200 EMA. Now we need to see if one of the stochastic line is under the 90 or not. As you can see, in this case, none of the lines are under the 10, so it's not going to be an oversold position. We are not going to enter this trade. Let's look for a long entry where that happens. As you can see, here we get a green dot printing under the 0 line. And if you take a look down on the stochastic RSI indicator, you can see that the red line is under the 10 line. So it's going to be a valid long entry. And if we want to take a short position, here, as you can see, the price is under the 200 EMA. We get a red dot above the 0 line, and one of the stochastic line is above the 90. So it's going to be a valid short entry right there. Another optimization you can try with the stochastic RSI is similar to the one I said earlier with the wave trend. So as I said, price moves in waves, and let's say if you want to take a short and you get two signals after each other very quickly, without having a significant pullback, you are less likely to get a nice and strong move in your desired direction. To have a filter for this problem, you can use the stochastic RSI. Try using the 50 level as a filter. So I just put up a line to the 50 level. So let's say you can only take the second trade in the same direction if one of the stochastic lines have pulled back to the 50 line on the stochastic RSI between the two entry signals. So what I mean by that, as you can see, here we would have taken a short position. We have a red dot above the 0 line and we have the price under the 200 EMA. And now if you want to take the next position, you need to wait for the stochastic to pull back under the 50 line and then come back up. And with that said, that wraps up today's video. Let me know if you found these optimization tips profitable, and don't forget to drop a like for the YouTube algorithm and subscribe if you haven't already. If you like these more detailed strategy optimization tips, let me know in the comment section so I will make more videos like this. As always, thank you for watching and see you in the next video.